The Chinese authorities announced that they will hold talks with the U.S. on the trade war, but at the same time, they suddenly revealed a reduction in the reserve requirement ratio and interest rates. On May 7th at 9 a.m., the governor of the People's Bank of China, Pan Gongshen, announced during a press conference that the central bank would lower the reserve requirement ratio for financial institutions by 0.5 percentage points, which is expected to provide long-term liquidity of about 1 trillion yuan to the market. They also reduced the policy interest rate by 0.1 percentage points, bringing the 7-day reverse repo rate down from 1.5% to 1.4%. Additionally, the rate for personal housing provident fund loans was cut by 0.25 percentage points, with the 5-year or longer-term first-time home loan rate now at 2.6%. The authorities also introduced 500 billion yuan for service consumption and pension loans, and 300 billion yuan for technological innovation and technical transformation loans. These measures are being marketed as part of a comprehensive financial policy to stabilize the market and expectations. But what is the real story? Many people are analyzing and interpreting this move. Some netizens had already hinted a few days ago on Douyin that the central bank would cut interest rates. One blogger said that domestic banks are now operating dangerously, running on empty.
最近听说了吗？深圳的银行已经快扛不住了。
Have you heard? Shenzhen banks are almost at their breaking point. Money is flooding into the banks, and deposits increased by 800 million yuan in the first quarter. One of my friends working in a bank said he's scared. No matter how the policy is promoted, people just aren't spending. They're not buying houses or investing. The money is just circulating and ending up back in the banks. The banks have exceeded the deposit targets, but they can't meet their lending targets. The banks aren't making profits from the spread and are close to being drained.
In the comments, people said, needed money can't be withdrawn. Unnecessary money is just being deposited. That's the reality. They only give money to the rich, nothing for the poor. The banks deserve it. Some users commented, doesn't watering the market mean the water is running out? There's not enough money? In fact, the banks have plenty of money. But why is the feeling among society and the public the opposite?
为什么社会突然没钱了？其实不是社会没钱了。
Why is there suddenly no money in society? Actually, it's not that there's less money. The total amount of money hasn't decreased. It's just that it's being distributed more unevenly. A large portion of wealth has concentrated in the hands of a few, while ordinary people are struggling. The wealthy haven't found suitable investment opportunities, so they're holding onto their money instead of investing it. On the other hand, ordinary people are burdened with heavy financial pressures from buying homes and have little to no extra money to spend. As a result, the flow of money in society has slowed down. The financial blogger Ray Ge said he had predicted this would happen, and now those property speculators will be busy again.
房吹马上又可以开始吹了，你看看我们说择机降准降息，今天降了。
The central bank has lowered the reserve requirement ratio and interest rates, which means property boosters can start promoting the market again. As we discussed before, they were waiting for the right moment to make these adjustments, and today they made the move. Why did they do it? It's simple. Offshore RMB exchange rates have been rising recently, and they likely chose this time to lower the rates because the exchange rate is favorable. Of course, this scenario has been predicted for a while. Now, the property boosters finally have a reason to start talking again, but let me tell you, no matter how much they lower their interest rates, the real estate market won't recover. Even if rates go down to zero, it won't help.
He said that while monetary policy can stimulate the economy, it doesn't do much for repairing the balance sheets of individuals. Sure, people might save a few hundred yuan in mortgage interest rates each month, but the overall mortgage debt remains rigid. He also repeatedly warns that almost every economic policy that comes out is first beneficial to those selling property. However, for many people who are simply stuck in the market, these so-called policies might numb them into thinking that housing prices will rebound. They end up missing the best time to sell. These people are in the most danger because each time their hopes are crushed and they watch housing prices continue to shrink. But when the market hits rock bottom, they won't be able to sell anymore. In stocks, when the market hits rock bottom, there's still some liquidity, and people can still trade and maybe recover some losses. But with property, there will be lots of situations where you can neither sell nor rent out the property. This is the reality many people will face in the future. Some netizens commented, in Guangzhou, they've already started talking about it. This property has drained 3 generations worth of savings, and the 4th generation isn't even born yet. The problem is, no one wants to put money into real estate. One netizen commented that China's economy is already severely ill. The real estate bubble has burst, local government debt is piling up, the consumption market is frozen, and domestic demand has nearly come to a halt. The unemployment rate among young people is high, with official figures exceeding 15%. The real situation is likely even worse. Data shows that in 2024, China's M2 money supply surpassed 300 trillion yuan, the highest in the world. However, excessive money printing has failed to stimulate the economy. The wealth of ordinary people is shrinking, living costs are soaring, while wages remain stagnant or even decline. In terms of exports, the U.S. imposed tariffs of 145% on Chinese goods, which has almost wiped out China's competitiveness. The shrinking global demand is making things worse for foreign trade companies, causing China's export economy to plummet. The Chinese government has always been reluctant to admit its dependence on U.S. exports. In 2024, they announced that direct exports to the U.S. accounted for 3% of GDP. While this might seem small, the impact on related industries is far greater than that figure suggests. Beijing claims that these measures are meant to help China's economy, which is caught in a trade war. But will lowering the reserve ratio and interest rates and injecting trillions into the economy actually save the market? This is just an attempt to delay the crisis and push the bad debts into the future. The current consumption slump is not just because people don't have money, but because they've lost confidence in the future. Young people can't find jobs, housing prices are high, and pension and healthcare security is weak. Who would dare to spend? A financial blogger revealed the consumption situation during the May Day holiday and expressed deep concern about the current state.
五一的数据出来了，但是陆哥得说一句，这个数据越火爆，它
The consumption data for the May Day holiday has come out, but I have to say, the more impressive the data looks, the more brutal the truth it reveals. Our consumption structure is collapsing from the middle class. It's not that people don't want to spend, but the people who want to spend and those who can afford to spend are not the same group. This year's May Day holiday, you should have already felt it. From the mountains to the coast, from high-speed rail to airplanes, from waterways to highways, everywhere is swarmed with people. Especially in some popular tourist spots, there were so many people that it was chaotic. According to the Ministry of Culture and Tourism's forecast, more than 310 million people traveled during the May Day period, with total consumption reaching 180.2 billion yuan. Travel and consumption data from places like Beijing, Anhui, Hubei, and Sichuan reached new heights. On the surface, this seems like great news, but many people feel something's not quite right. How did everyone suddenly become so wealthy? Is that really the case? Let's do the math.
The total number of trips was 314 million, but the total spending was 180.2 billion yuan. This means that each person spent only 114 yuan per day. This consumption level is not only lower than the 151 yuan spent during the May Day holiday in 2019, but also lower than the average spending during the 5 major holidays since the Dragon Boat Festival in 2023. In simple terms, most of the people who traveled during the May Day holiday did go out and enjoy themselves, but they were on a tight budget. It can't really be called consumption. It's more like meeting basic travel needs. To put it bluntly, it's just forced spending because they don't have much money. But is it true that people don't have money to spend? According to the data, China's total savings surpassed 160 trillion yuan in March this year, meaning that on average, every Chinese person has 100,000 yuan in savings, roughly 13,820 US dollars. He said, if you're a family of 3, you should have 300,000 yuan in savings. This figure is already higher than the country's GDP from last year. The problem, though, is that this is just an average. Just because the average person has money doesn't mean that you really have money. Some people spent their May Day holiday staying in luxury hotels and flying to the Maldives, while others could only afford budget hotels or hostels, or even walked everywhere. Looking at the per capita consumption data, it seems that most people are traveling on a budget, which shows a large disparity in consumption. Why is this happening? The blogger explains that it is related to the disappearance of China's middle income group. He said that according to statistics, China has about 400 million people in the middle income group, which would be quite significant for a country. With such a large middle income population, China's high-end consumption market should be thriving. However, in reality, a study by Southwestern University of Finance and Economics found that middle income people in first and second tier cities, who theoretically should be the main force in consumption, actually have less desire to spend than people living in third and fourth tier small cities. One major reason for this is that over the past 10 years, the so-called high-income people in first and second-tier cities have actually been the biggest victims of soaring housing prices. Many of them bought homes at high prices, took on large mortgages, and have also suffered from the pain of falling housing prices over the past 2 years. On top of that, they often have to support elderly parents and young children.
结果就是原本应该承担起消费中断的他们
As a result, the people who should be the main consumers have been effectively put on pause. Their desire to spend is neither as strong as the elderly, nor as strong as Gen Z. The once complete structure of the consumption pyramid now has the middle part missing, making it fragmented. This has led to extreme consumption polarization in China today. The wealthiest continue to enjoy high-end services and products, while people below the middle class are increasingly choosing low-cost travel and similar affordable options. After all, who doesn't like to consume? But first, you need to meet the basic survival needs.
One netizen commented, "During the May Day holiday, I had no money, but I still spent it. Come join me." Over 500 people replied. Another netizen said, "I spent 50 yuan on groceries during the May Day holiday and just stayed home for 3 days." Some analysts say that Beijing's policy seems to be inclusive, but in reality it hides a catch. The trillions of yuan released by lowering the reserve requirement mostly flow to state-owned enterprises, real estate, and local governments, making it difficult for ordinary people to benefit. Meanwhile, the wealthy can use their asset advantages to easily obtain low-interest loans, which they can use for property speculation, stock trading, or converting to US dollars and gold for overseas transfers. The 500 billion yuan for consumption loans and the 300 billion yuan for technological innovation loans that Pan Gongshen mentioned sound impressive, but who would actually get them? It's likely that only the privileged with connections and collateral will benefit. As for ordinary people, their wages aren't rising, prices are soaring, and their savings are becoming worthless. Ironically, excessive money printing will put pressure on the yuan. By early 2025, the yuan's exchange rate against the US dollar had already started to weaken. If this policy continues, the devaluation risk will increase, and foreign capital will accelerate its exit. In 2024, foreign direct investment reached its lowest point in 30 years. The wealthy are moving their assets abroad, leaving behind debt holes, and in the end, it's ordinary people who will bear the cost. A vlogger pointed out that the authorities' policy didn't reach the areas that needed it.
国家放水本来是想帮小微企业，结果呢？
The country's water release was meant to help small and micro enterprises, but instead, the money ended up going to large companies. Large corporations are using low-interest loans, not to boost production, but to play financial games, issuing bills of exchange, making arbitrage profits, and investing in wealth management products to earn money, without doing any real work. Meanwhile, small business owners who truly need money are running around, mortgaging their homes, submitting piles of documents, and they still can't get loans. What's even more frustrating is that supply chain finance, which should be a good policy, is being turned into a money-making racket by big corporations. They take low-cost loans and lend them to small enterprises at higher rates, making a profit in the middle. Wait, isn't this just exploitation? Banks shouldn't just focus on big clients. Regulators need to step in and ensure that a greater proportion of loans are directed to small businesses. They should investigate the tricks being used for profit-making and arbitrage. The money needs to reach businesses in need, not just circulate in the financial sector. Only then can small businesses survive, and only then can the economy have a future. One netizen commented, "Stop telling the truth, protect yourself." Another netizen said, "The banks have plenty of money, but it's not their own, and that's terrifying. The government just wants to push the people's money into its own scam. If you try to withdraw cash, they think you're trying to run away." Some professionals believe that the Chinese government's actions were a response to the latest Caixin PMI data falling short of expectations, and official data showing increased downturn pressure on the economy. Even the government's adjusted figures can't hide the true state of China's economy. According to the National Bureau of Statistics, in April, the Purchasing Managers Index PMI for manufacturing dropped by 1.5 points. The PMI for services dropped by 0.2 points. The former fell back into contraction for the first time in 2 months. The composite output index dropped by 1.2 percentage points to 50.2. Business confidence was significantly impacted by tariff disruptions, and the business expectations index dropped sharply within the expansion range in April. With the U.S. imposing up to 145% tariffs on Chinese goods and removing the duty-free threshold for small packages, the direct effect of monetary easing on boosting foreign trade is limited. While the liquidity released by the cut to the reserve requirement ratio might ease some of the financial pressure on businesses, it's uncertain whether these measures will effectively reverse the sudden halt in foreign trade orders and production slowdowns. Regarding the domestic economy, China is currently facing multiple challenges, such as a real estate crisis and weak consumption. It's unclear whether the interest rate cuts will effectively stimulate investment and consumption. Moreover, with business confidence severely shaken by tariffs, relying solely on monetary policy may not fundamentally reverse expectations. This so-called water release has also been interpreted as the authorities' effort to coordinate with the upcoming U.S.-China trade talks. On the morning of May 7th, the Chinese Ministry of Foreign Affairs announced that Vice Premier He Lifeng will visit Switzerland from May 9th to 12th. During his visit, He will meet with the U.S. Treasury Secretary Scott Bessent. The Chinese Communist Party's decision to announce a reserve requirement ratio and interest rate cut before the critical talk has sparked multiple speculations. This move could be Beijing's attempt to signal to the U.S. that it is willing to resolve issues through negotiation, hoping to ease trade tensions. However, it may also reflect the severe domestic economic situation, forcing the CCP to adopt these measures to stabilize the market. Earlier, China's central bank had hinted that it would adjust monetary policy at an appropriate time to support the economy amid escalating trade tensions between China and the U.S. This shift shows that China's economic difficulties have become quite severe. However, Li believes that these emergency measures are unlikely to fundamentally address China's structural economic issues. Last year, the CCP also cut both the benchmark interest rate and the reserve requirement ratio twice to boost the struggling economy, but the results now are clear. He said, "These effects can only last for a short time. After a while, China's economic woes will only deepen." This week, official data on imports and exports for April will be released, which is expected to further reveal the specific impact of the U.S.-China trade war. Li Lingyi estimates that the data will be even worse. Some netizens also suggested that, facing the U.S. high tariffs, Beijing has chosen a strategy of fighting fire with fire. During a Politburo meeting, Xi Jinping emphasized bottom-line thinking, showing a tough stance. Pan Gongsheng's reserve requirement and interest rate cuts can also be seen as ammunition for the trade war. The problem, however, is that China's fundamental economic issues are not a lack of money, but rather structural problems. The reliance on export and investment-driven growth has reached its limit, technological innovation is stifled by bureaucracy, and private enterprises are being squeezed by state-owned enterprises. Beijing is afraid of deep reforms, yet continues to rely on money printing to extend its life. Throughout history, the tragedies of hyperinflation in countries like Zimbabwe and Venezuela have unfolded many times. Endless money printing will only inflate the economic bubble further, and when it bursts, the consequences will be even more severe.